What's going on, everybody? Today we're talking about a high growth profitable company called Celsius Holdings, ticker CELH. This stock needs to be on your watch list ASAP. They're currently down 35% from their recent highs, which makes it a perfect time to at least start looking into the company or put it back on your radar. Let me give you a refresher or overview of this company in less than a minute. This is a company that has been growing revenues at an alarming rate, seeing pretty consistent 60% revenue growth domestically, and overall revenue growth has taken off this past year. Celsius Holdings sells energy drinks ranging from everyday energy boosts to pre-workouts, recovery drinks, and on-the-go powder sticks, and they're formulated with their proprietary MetaPlus formula. They have a very impressive range of distributors and customers, with new ones constantly being added, of course. They also acquired Funk Foods in late 2019 to expand their distribution and marketing into the Nordic region and around Europe. This has led to an insane uptick in international revenue growth, but there's more to that than meets the eye, which we'll talk about later. It's very important. They also have exposure in China via a royalty agreement with Funk Foods started in January of 2019, and trust me, everything I'm saying is important to the rest of the video. Lastly, as an investor, I keep my ear to the ground for any buzz around Celsius, and especially this past quarter, it's been phenomenal. The craziest one I saw was sponsoring Dustin Poirier, who recently beat Conor McGregor and has 2.7 million Instagram followers. I've also seen them just casually in a lot of vloggers' videos, and they're not sponsored, but it's only a matter of time before they get sponsored. So I get it, that was a little bit over a minute, but it was all necessary information, and now that means we can talk about their most recent full year fourth quarter results. I'll also talk about their valuation, what I'm doing, what prices I would buy at, but let's get into the results first. So they missed EPS by 1 cent for the fourth quarter, but 2020 as a whole was a pretty phenomenal year for Celsius. They had a record $130 million in revenue, with $8.5 million in net income and $15 million in EBITDA. And $130 million in revenue is no joke. I'll explain why later. Year over year, their revenues increased 73%, and even better, their gross profit increased 94% year over year. They reported 46.64% gross margin for 2020, and in Q4 specifically, they saw a 48.9% gross margin, which is just absolutely nuts. And if they use the same accounting as competitors like Monster, where they actually exclude outbound freight, the margins would be 57.2%. In other highlights, they added Speedway as a new customer with 2,700 locations. And this is something, what I'm about to show you is something I did not expect, okay? Get ready for this. Their fitness channels, which is where they sell Celsius at fitness centers and gyms, that's a 22% growth rate year over year compared to the fourth quarter of 2019. That's insane because in the fourth quarter of 2019, that was before the world shut down. Gyms and everything was all still at full capacity. And their fourth quarter of 2020 was still during lockdowns. They saw a 22% increase versus the past year in 2019. So just imagine the growth in their fitness channel when things open back up again and everything is all okay. This is clearly kind of a slept on reopening play perhaps. Additionally, and by the way, I annotated these for my top tier patrons. I sent them a whole transcript of the Celsius earnings call and annotated it with all my notes, so that's what you're seeing here. But they are now the third largest energy drink brand on all of Amazon, within just 0.2 percentage points of Red Bull in terms of Amazon energy drink market share, while growing way faster than both Red Bull and Monster. And hot take, I actually think that the Roni Rona was probably a good thing for Celsius. I mean, if you think about it, there's probably a lot of people who would go to these fitness centers and these gyms and only buy Celsius when they get there and just drink it there and then go home. And you buy them in single cans because they're in the fridges. But if you're at home, working out at home, you buy them on Amazon, you buy them in a case, right? They sit in your fridge, and then they kind of seep into your daily life. You're like, maybe I'll try Celsius instead of my coffee today, or I need like an energy boost to get through this work from home. I'll drink a Celsius. And all of a sudden it transitions from something you just drink at the gym to something you drink in your everyday life. In other words, I think this past year probably helped Celsius get more involved into the consumer's everyday life because it can actually be a soda replacement. It doesn't taste like an energy drink. Monster, Red Bull, even the Rock's new energy drink, they taste like energy drinks. So I probably wouldn't drink that with my lunch, but I can do that with Celsius if I also want an energy boost. So I think that's huge for their lifestyle branding. In other news, they have rolled out their first 1,000 branded coolers in the first quarter of 2021, and it's already showing positive ROI and paying for itself within 3 months, and over a 200% increase in product velocity. That's ridiculous. So this is terrible photo quality, but if you're an investor or looking to invest and you see one of these bad boys at your local Target or somewhere, keep an eye out because they're putting in some work for Celsius sales velocity. The company also has an incredibly strong debt-free balance sheet. You can see I was quite excited to see that again in my notes here, and I love a company with a strong balance sheet. Not only does a strong balance sheet let me sleep soundly at night as an investor, but with high cash, low debt, you're able to do a lot more in terms of reinvesting into the company and experimenting. Now, moving into a couple critiques, some people might say their sales and marketing expenses jumped 65% year over year, which is a lot. But let me point a couple things out. One, sales and marketing is actually a lower percentage of revenue than it was a year ago, going from 28% to just under 27%. And sales and marketing increased 65% year over year, but revenues grew 73%. So as long as revenues are outpacing sales in terms of percentage growth year over year, I am a happy investor. And finally, a lot of people say when looking at Celsius, the barrier to entry is far too low for energy drinks. And that's definitely a valid point that I want to address. So in a recent interview with UBS, John Fieldly, the CEO, said something that really stuck with me. So what he said is that according to him, about 5,000 new brands or names or drinks come onto the market every year. And of those 5,000, about 1% make it to 10 million in sales. And of those who make it to 10 million, about 1% of those make it to 100 million in sales. And Celsius just closed 130 million in revenue in this past year. So yeah, it's easy to get into the game, but it's a lot harder to stay in the game and become a serious big player like Monster, Energy, that's the same company, Rockstar, Red Bull, all these guys. And the last thing I'll say here is that Celsius is actually going after a completely different or wider demographic. For example, half of Celsius customers are actually female, and that is not the case for Monster or Red Bull. I mean, just think about the advertising. If you really tried, you could maybe even make a case that their TAM could be bigger. But I don't want to stretch it there. I'm not here to sell you on this, right? I'm just here to provide thoughts and facts. So let's get into why they dropped 20% after earnings. I think there are a couple of reasons here. First, in early January, it was announced that they'd be added to this S&P 600 small cap index, January 6th to be exact. And after that, it sent it up another 32% till it reached its recent peak. But as I mentioned in the video that I made after the inclusion announcement, studies show that S&P 600 inclusion usually increases price and volume, but within 60 days, it is usually reversed to what it was before. And this is kind of scary. In almost exactly 60 days, Celsius was pretty much flat from January 6th when the headline first came out. So that was actually kind of cool to see. So that's how we got to the high to pretty much the few days leading up to earnings. And the second thing at play here, I think, is that the company simply got a little bit ahead of itself. Its valuation was very, very stretched going into earnings, and so much so I actually made a video for my top tier patrons explaining why I thought Celsius had a very high likelihood of either staying flat or dropping after earnings. And a lot of people ask me, if you thought it was going to drop into earnings, why did you not sell? And this is probably a question I would get a lot. And for me, it's not worth it to gamble on an earnings play if I'm in this stock for the next 5, maybe even 10 years because of the growth I see ahead of this company. I might save myself some money in the short term, but I'll still have to buy in at a higher cost basis, and there's always the risk that I'm wrong. And finally, I think this dip is actually good for long-term holders such as myself because one, it keeps our stock connected to reality. If it's running into the moon and it's not based on fundamentals, for me, that's a really hard position to be in because I like the stock a lot, but even if I project out maybe 5 years, if it doesn't make sense, it's really hard for me to make that decision. Do I sell? Do I hold? I don't know. But if you get into this one, expect a very volatile ride. So while I think I'll make good money on this stock over the long term, I do want to talk about some risks. I don't want to just talk about the good. It's healthy to look at all the risks as well as an investor. So here's some things that I think could affect Celsius within the next 1 to 2 years. So the first one is actually an aluminum can shortage. Yeah, you heard that right. So there's actually a shortage of aluminum cans domestically, and freight costs are also increasing for a lot of those cans and other raw materials. So I think Celsius, they're going to see their gross margin compressed to the low 40% range, which means, a little bit less profitability within the next 6 to 12 months. They should subside in the second half of 2021 into 2022. But another concern that's probably more important for anyone who's new to this stock is actually their international revenue growth. So you see that explosive growth in international revenues as we expected when I first talked about Celsius, but on a quarterly basis, we saw a decrease in international revenues, and revenues in the Nordic region and in China actually grew at a single-digit pace. So that was due to, they say, the fast bar production delays and Fastbar is a product of Funk Foods in the Nordic region, and due to the Rona and timing of promotional activities. The danger here, especially for new investors, is that if you come in and you see 133% revenue growth in international revenues, 73+% in overall revenue growth. That looks really, really attractive for a stock, and you might expect that to continue. But I believe that this increase in revenue growth was actually because in late 2019 was when they acquired Funk Foods. So in the acquisition, they're bringing in a ton of revenue from Funk Foods now into Celsius, right? So if you're comparing the whole year of 2020 versus the whole year of 2019, and in 2019 you only had Funk Foods in the fourth quarter, then that means, of course, you're going to see a huge increase in 2020 revenues, because now you have an entire new business that you didn't really have in all of 2019. So that's probably not going to be sustainable in terms of international revenue growth moving forward, which is why overall revenue growth could take a hit within the next year. Analysts are projecting just 34% growth for Celsius this year and 36% the next year. Personally, I think they can crush that. I can easily see 40% plus revenue growth, but probably not over 70% like we saw in 2020. So now let's talk about the valuation a little bit. I like to keep it simple with the price to sales ratio. There's a lot more that goes into valuing a company, of course. You can also use the PE ratio on Celsius because they are profitable, but I don't like to do that here. I don't think it's right because they're focused primarily on hyper revenue growth. They are growing profitably, but their goal is not to be super profitable right now. Anyways, with a $3.24 billion market cap and 2020 sales of $130 million, that's a price to sales of just under 25x. Now, with $175.5 million in revenue for 2021, based on what analysts are saying, that's a forward price to sales of about 18.4x. Personally, I think that is a bit expensive. It's hard to tell in this kind of market where valuation doesn't seem to matter. But at the end of the day, as we just saw in the correction in tech, valuation does matter. So for a company that's consistently growing 60, 70% annually, 100%, maybe 18x for a forward price to sales ratio is worth it. But again, don't expect to see that 70% annual growth rate again in the near term for Celsius, but they're still going to be growing incredibly fast, probably over 40% for the next several years. All right, so what prices am I looking to buy this stock at? Now, everyone has their own personal risk tolerance, time horizons, and different situations going on. So again, this is not financial advice. This is all entertainment purposes only, all that stuff. But for me right now at 45, I might consider nibbling here, maybe a few shares here and there, but I have most of my position built out already. If it goes under 30, I'm definitely going to consider adding relatively heavily. If it goes under 25, I will be very interested. I'll probably add heavily. And if it goes under 20, oh my gosh, I'm selling something probably to go buy more Celsius if it goes under 20, because you're giving me a much better business than it was when I first bought it at the same price. So if it goes 20, I'm going to be making a lot of videos about Celsius. That's all I'm saying. So if you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out our quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous. Oh, also my Patreon is kind of open. It has a few spots left if you want to try and join. So that's in the link in the description below.